Hi, I'm Carlo Mincatelli of Time 2 Resources. This video will help you to understand the operating profit margin. If you want to make notes whilst following the video, why not download the handy PDF note taker? The link can be found in the description box below. Operating profit margin is a measure of a firm's profitability by looking at the relationship between operating profit and sales revenue. To find the operating profit margin, we use the formula operating profit margin equals operating profit divided by sales revenue times 100. Here we have an extract from an income statement. Sales revenue is £50,000. We deduct the cost of sales such as raw materials to get a gross profit of £35,000. From this we deduct expenses to get an operating profit of £20,000. To find the relationship between operating profit and sales revenue, we use the operating profit margin. So an operating profit of £20,000 divided by a sales revenue of £50,000 times 100 to get a percentage gives us 40%. So what does this figure of 40% tell us? For every £1 of sales revenue, the business makes 40p operating profit. If operating profit is low or falling, this may indicate that a business, firstly, is not managing its cost of sales effectively. For example, the cost of raw materials are too high. This will impact on both gross profit and operating profit. Secondly, the business is not managing its expenses effectively. Alternatively, it could be that sales are low in comparison to the cost of goods sold or the business's expenses. Let's look more closely at the income statement and its relationship to operating profit. To find gross profit, we take away the direct cost of producing the product from sales revenue. For operating profit, we deduct expenses. These are often called overheads and are incurred through carrying out the day-to-day activities of the business that are not associated with the direct cost of production. The business will have to pay administrative expenses. These might include rent, utility bills such as gas, electricity, water, wages for office staff, business travel, fringe benefits, and depreciation. Here we have an extract from an income statement. Why don't you pause the video and see if you can work out the operating profit and then the operating profit margin. How did you get on? We have an operating profit of £25,000 divided by a sales revenue of £75,000 times 100 to give us an operating profit margin of 33.3%. Thank you for watching and listening to this presentation. We look at a number of ratios in other presentations. If you haven't already done so, why not subscribe to the Time 2 Resources YouTube channel now?